free market economy where people want to make choices, some of which affect the fundamental bottom line. So, Governor, it is my pleasure to welcome you, and I'm glad you're here today, and I can't wait to hear your presentation as the nation awaits to hear from you. I would like to thank APSA for their continuing support for this initiative as we look forward in the common obligation of serving our country, Ghana. Thank you and welcome.
Thank you, Dean of the UPSA Law School, Professor Ernest Kofi Abochi. Next on the item, I have remarks by head sponsor, APSA. Ladies and gentlemen, let's welcome Nana Esilfua Tamaklo, Director, Marketing and Corporate Affairs, APSA Bank, to give us remarks. Thank you.
Thank you very much. The Governor of the Bank of Ghana, Dr. Johnson Asiama, Professor Kofi Abochi, I know the Vice Chancellor is not here, and the distinguished faculty of the UPSA Law School, and esteemed panelists. I have my own colleague here, Adolf, and invited guests, ladies and gentlemen. Good afternoon. For us, it's an honor for us to be here for the 11th edition of the UPSA Quarterly Banking Roundtable. And actually, Kofi, I'm only here because, you know, I won't pay the bills if you don't put me here, so you always have to bring me up. But we are very excited to be part of this sponsorship. We have valued it for years, and not only for the pedigree of the platform, but more importantly, for its purpose. This quarterly banking platform creates space for rigorous thinking, critical dialogue, and the kind of collaboration our industry and indeed the country thrives on. So as a systemically important financial institution, APSA's role goes beyond banking. We see ourselves as an active force for good, and therefore it is our responsibility to contribute meaningfully to Ghana's development discourse. This includes providing platforms such as this to amplify voices and ideas that drive reform, stability, and sustainable growth. The theme for today's roundtable, Legal Tender, Monetary Policy, and the Rising City, could not be more timely. It highlights key issues that affect all of us, households, businesses, policymakers, and banks alike. So I leave the deeper reflections to the experts who will be unpacking this topic. However, I believe we can all agree that the economic outlook is pointing in the right direction. So our shared responsibility now is to work together and sustain this momentum. That progress cannot rest on policy alone. It is grounded in trust, built through collaboration and supported by institutions, academic, regulatory, and financial. So APSA Bank is proud to be part of this ecosystem. Let me once again commend the Dean and the faculty of UPSA Law School for their vision and consistency in holding this quarterly roundtable. We remain proud partners. And Governor, I have to extend my MD's absence, and he's flying in from South Africa. That's why he couldn't be here. So we look forward to many more insightful editions such as this, and thank you very much.
Nana Esilfua Tamaklo, thanks for being there for the UPSA Law School for 11 times. We are grateful. Thank you. We'll move on to the next thing on the item. That's going to be the keynotes by the special guest of honor. We want to do this quickly and then move on to other things. But after the keynote address, there's going to be a panel discussion. And if you see the backdrop, you will see those who will be participating in the discussion. We'll have Emmeline Afi Ofosu. We'll have Mr. Adolf Pega and Mr. Yao Apia Lati from Deloitte. Mr. Adolf Pega is from APSA. And so they'll be part of the panel discussion. So on this note, and as I go on, I'll be making acknowledgments. There are a few people here I'll acknowledge as the program advances. And so let me not waste time. Let me invite the keynote address from the special guest of honor, who is the boss of the Bank of Ghana, the man who is doing a lot of magic and putting the city in good shape. Let's put our hands together for Director. Let's put our hands together for.
Sit. Hey. Hello. Good afternoon. So it's good to see you all. Very, very young people gathered. I'm sure you are enjoying school. I hope you are enjoying school. Okay, so I have a short prepared speech here. So I'm just going to read through it. But I'll bring you greetings from the central bank. These days we are quite busy. We are busy because it has to do with the US dollar, isn't it? It's a daily fight. The MPC, you heard about the MPC, the Monetary Policy Committee. They had to meet this morning in an emergency meeting, not to set or do anything about the policy rate, but just to review the numbers and also take stock of some of the developments in the markets to get a sense of what is going on and what our options are. Ahead of their meeting, the main meeting is in 10 days. And so from morning, we were at that. We just closed from that meeting. And I decided to rush here, share a few thoughts with you. After that, I'll go back to work on the statement that will be issued later today. It is not a policy statement. It is not what we normally do. Many people were thinking we're going to do something about the monetary policy rate. That was not the objective. It was just to look at the numbers ahead of the main meeting that will start in 10 days' time. So I'm glad to be here. Dean of the Upsa Law School, Professor Ines Kofi Abochi, I really enjoy listening to you all the time when you're on stage. Distinguished faculty and staff of this esteemed institution. We have a number of panelists here. After I'm gone, they'll take my place and discuss the issues in depth. We have some scholars here, captains of the financial industry. I can see Mr. John Ewa and others, a few managing directors as well, representatives from the media, ladies and gentlemen. So let me begin by expressing my heartfelt gratitude to the leadership of Upsa Law School for this invitation and for convening such an important and timely dialogue. The quarterly banking roundtable has rightfully earned its place as a premier platform for policy, academic, and professional exchange. Exchange where thought meets strategy and scholarship meets national imperative. And I'm deeply honored to be part of today's conversation. So, colleagues, we gather at a critical juncture in Ghana's economic trajectory after navigating a turbulent period marked by global shocks, domestic restructuring, and currency depreciation. And Ghana stands today on a firmer footing. Confidence is returning, economic momentum is strengthening, and most symbolically, the Ghanaian cedi has become a testament to resilience, to recovery, and to reform. Colleagues, this turnaround is not cosmetic, as we always say. It is structural. It is backed by stronger fundamentals, prudent macroeconomic management, a disciplined monetary policy stance, and a growing sense of national purpose. Inflation, as you are aware, has fallen to its lowest level since 2021, and the cedi has appreciated over 42% year to date, while gross international reserves have risen to over 11 billion, which is equivalent to 4.8 months of imports cover, while provisional trade surplus records about 5.6 billion. But let us be clear, currency stability is not merely a technical victory. It's not at all. It is a psychological one. It shapes how people save, how people invest, how people transact, and ultimately, how they trust the state. Confidence in the city, therefore, is a mirror of confidence in our institutions. It is a barometer of sovereignty, a symbol of our unity, and a driver of our collective economic destiny. And so today's theme, Ghana's legal tender, monetary policy, and the rising cedi, is not only relevant, it is very essential. It calls us to examine not just how the cedi has recovered, but how we as a nation can entrench that recovery through legal, policy, and behavioral alignment. And I'll come to each of these later in my delivery. Now, at the heart of any sovereign monetary system lies a legal foundation, a foundation that defines and protects its currency. So in Ghana, this foundation is established by the Bank of Ghana Act 2002, which is quite an old act, Act 612. This act confers exclusive authority on the Bank of Ghana on the issue of issuing currency, and the act designates the Ghanaian cedi as legal tender for all transactions conducted within the Republic. And let me say that the dollar is not legal tender. It cannot go everywhere the cedi goes. The dollar is not legal tender in Ghana. What it means is if you pay me in dollars for service or something I sell to you, I have every right to say no, I will not accept it, right? So why do we allow the dollar to go everywhere the cedi goes? Consciously, we must be able to protect the cedi. We must be able to ensure that it's the only form of transacting in this country. Now, legal tender in its simplest form refers to money that must be accepted if offered in payment of a debt. But its implications are far deeper. It underpins the legitimacy of pricing, the enforceability of contracts, the structure of our payment systems, and the integrity of our financial markets. What this means is that any attempt to displace the cedi in ordinary commercial transactions, whether through mandatory dollar invoicing, preferential pricing in foreign currency, or informal currency substitution, is not only economically distorting, but also legally impermissible. It challenges the very fabric of monetary sovereignty. So the legal tender status of the cedi is therefore not a ceremonial provision. It is the cornerstone of macroeconomic governance. It ensures that monetary policy decisions, interest rates, liquidity management, inflation control, all these can transmit effectively through the economy. And without a dominant legal tender, no central bank, no matter how technically capable, can execute its mandate successfully. But the cedi is more than just a unit of account or a store of value. It is an emblem of Ghana's journey as a modern state. Now, cast your minds back to 1965, when the cedi replaced the British West African pound. For those of you, maybe most of you were not born at that time. The West African pound used to exist prior to the introduction of the cedi. That event marked a profound act of economic self-determination. And this was done by our first president, Dr. Kwame Nkrumah. It was not merely a currency change. It was a declaration that Ghana would no longer outsource its monetary destiny. The cedi became a symbol of national identity, of institutional emergence, and of the aspirations of an independent people. And so this month, July of 2025, marks 60 years exactly when the first president of Ghana introduced the cedi. And accordingly, we are going to celebrate it. For the next 6 months, there are a number of events we've lined up. All this is determined to retune our thinking. Kwame Nkrumah gave us the cedi. What are we doing with it? The cedi has gone through many facets. And we are going to be discussing all these in the next 6 months. We are going to be charting forward another journey for the cedi. The cedi can be as good as the rand. Why is it not as good as the rand? So therefore, collectively, we will get this fixed. The cedi can be as good as any currency. You don't need to hold the dollar. It all depends on what we collectively do with the currency. Now, on the 8th of August, the celebration will be launched by His Excellency the President at the International Conference Center. And let me invite all of you, as many as you can, please join us. We want to make a bold statement that day, that as a people, if 60 years ago, the first president of Ghana decided to take our history, our affairs, into our own hands, 60 years down the road, we should be doing the same. And we must all collectively, as one, make a bold statement that day. So over the past 6 decades, the cedi has borne witness to Ghana's economic highs and lows. It moved from fixed exchange regimes and liberalization to redenomination and the modern digital economy. Through all these, it has remained a thread that binds our economic story together. And yet, the greatest threat to its legitimacy today is not inflation or external shocks. It is the erosion of public trust through informal substitution, and dollar preference. In too many instances, whether in real estate, whether in paying school fees, or whether in high-value retail, the cedi is bypassed. Not because it is legally unfit, but because we have allowed perception to trump policy and convenience to trump sovereignty. How many of us are not guilty about this? I was in a program yesterday or so, and I was urging them not to allow the allergies or the examiners to project to project exchange rate depreciation. Now, the exchange rate is what we call an endogenous variable. It is driven by a number of macroeconomic factors. And so, therefore, we churn out data repeatedly. If you go to our website, there's a lot of data there. The idea is so you can use that data, right, to form your own projections, your perceptions about where the cedi will be vis-a-vis the dollar. But it is as if our people don't refer to those. We prefer to listen to someone in the corner somewhere to tell you where the cedi will be. And so recently, you saw when the cedi began to appreciate, it just kept going. It just kept going. And we kept saying, no, just allow it to move. What we have is a managed float system. And that system is appropriate for our kind of economy. Now, we did not expect it to just keep going and going and going. We knew that at some point it recovers. Now, as it moves, as it is, continues to move flexibly, it's actually protecting the country. It's responding to a number of, variables in the country. And by being flexible in itself, it helps to protect the country against shocks. So allow it to move. When it begins to come up, allow it to come up, right? It will go down again. Now, in so doing, there's one thing we look at. What we look at is called the real effective exchange rate. The real effective exchange rate is a combination of both inflation and the nominal exchange rate. So while the nominal exchange rate is moving, we are looking at what's happening to inflation. And therefore, there's something we call exchange rate misalignment. So long as, in real terms, it is not misaligned, you'll notice that we allow the nominal exchange rate to continue to move. But as soon as we notice a persistent realignment, that means something needs to be done, and that's where we intervene. So these things don't just happen. And if there's anything I want you to remember this evening, all I'm saying is let these things be driven by evidence, by the data, not by what my good friend, the Alaji in the corner, tells you. These are macroeconomic factors. And as students, I want you to develop that. Everything, every projection, every forecast, anything you want to do, let it be what? Backed by data. Look for the data, form your own expectations. This thing about the heading effect, everybody moves in one direction. Now that the CD somehow has stabilized, we're seeing some bit of tension. Everybody thinks, oh, it's about to reverse its gains. It's not about to reverse its gains, right? If we allow the CD to perform the function it's supposed to perform within a flexible exchange rate regime, you see these movements, right? It doesn't mean the world is going to come to an end because it will move again, right? So this attitude needs to change. In countries like Kenya and South Africa, it will be unthinkable for a citizen to reject the local currency in favor of the US dollar. And those of you who have traveled to South Africa will bear witness, right? When you go there and you give someone the US dollar, they tell you to go to give them the rand, right? But in Ghana, if I give you the US dollar, what will you do? You keep it. But I expect you to tell me, no, please, give me the CD. Can we get to that? Can we ever get to that? Within my lifetime, I pray I see it within my lifetime. Right. Right. So in Ghana, if we are to safeguard the city's role in our economy, we must begin by reclaiming its prestige in our everyday lives. Let us price in cities, and let us transact in cities. Let us teach our children that the city is worthy of their trust, their savings, and their ambition. Because in the end, the strength of a currency is not determined only by central banks or financial markets. It is determined by the people who use it, the people who protect it, and the people who believe in it. And recently, I heard about a story somebody was telling me somewhere within Accra where you find these currency counterfeiters. You know about counterfeiters? Those who try to produce the notes on their own, illegally. And he was telling me people in the area know about this, and yet they are not concerned. And so when we allow such things to thrive in society, why then are we surprised that the currency doesn't have worth? If you find anyone engaging in currency counterfeiting, whether the cedi, the dollar, or whichever one. Please, my phone number is all over the place. Everyone knows my phone number. Send me a WhatsApp. Send me a WhatsApp. You know, and the heartbreaking part is that I'm told a lot of foreigners are involved in that, right? They are counterfeiting Kwame Nkrumah's cedi. The cedi he introduced, they are counterfeiting it. They are destroying it. And Ghanaians know these people. They just keep quiet. They look on. Something needs to change about us. We all have a role to play when it comes to preserving the worth of the cedi. We will do our part. At the Bank of Ghana, we will. That's what we are paid to do on a daily basis. But you must do your part also. If you find somebody doing the wrong thing, just send us the details, and we will move in. Now, currency stability does not occur by chance. It is engineered through prudent monetary policy, through disciplined coordination, and the ability to inspire confidence in the future path of the economy. And in recent months, the Ghanaian cedi has experienced one of its most remarkable turnarounds in recent memory. Behind this resurgence lies a carefully calibrated policy mix, built on sound principles and timely interventions. So at the core of our approach is an inflation targeting framework I'm sure many of you know about. This framework guides our monetary policy stance and anchors our expectations. It is this framework that defines the threshold for tightening or loosening liquidity, ensuring that decisions are forward-looking and data-driven. And again, the name inflation targeting, I always say that it is like a misnomer. The name is misleading. Many people hear about it and they conclude that all that we are interested in is inflation. It's not. We are interested in the real sector developments as well. In fact, if you come to our monetary policy sessions, you see us go through so many kinds of real sector data. And what we have done since we came into office was to open things up. And so if you want to witness what we do before the decision is made, you are welcome. Just send us a letter. You want to observe. You are allowed to come, you sit in, you participate in the arguments. You actually ask questions, and the technical staff are there to answer. So at the end of the day, you can actually have a feel of whether the policy rate should go in a particular way. And we've also changed the voting pattern. So these days, it is the majority decision that counts. And even after the voting, we publish the arguments that each of the members made for which reason they voted in a particular way. And so what we brought on board 5 months ago is greater transparency. And we want the people of Ghana to be involved in monetary policy making. It shouldn't be something that is shrouded within the walls of Bank of Ghana alone, but it should be something that you are able to replicate, right? It doesn't matter who sits in the chair. If you sat in my chair, you do pretty much what I do. Because that is credibility. That's how we buy credibility among the people, among economic agents. And so these days, we go all over the place, even after MPC, explaining what it is that we do, etc. And so as academia, you can organize yourselves. You're more than welcome. Come and see in practice, right? Are there any economics students here? Do I have any students here learning economics? Can I see you by hands? Who are the economists here? You are all what? Law students. Forgive me. I thought some economy students were here. But never mind. Even if you are reading law, you may want to understand what we do. Is that okay? So that's good. You can organize yourselves. We can arrange for you to come and observe what we do, right? Okay. So key among our instruments is the monetary policy rate, which serves as the primary tool for signaling the direction of inflation and managing liquidity conditions in the economy. By adjusting the policy rate, the bank influences borrowing costs, it influences credit creation, and it influences consumer behavior. We also complement these with what we call open market operations, including the sale and purchase of Bank of Ghana bills to fine-tune our short-term liquidity management framework. These operations have been critical in sterilizing excess liquidity and reinforcing the policy rate corridor. To stabilize the exchange rate and reduce speculation, we deploy a transparent and rules-based forex auction system. These auctions allow the bank to meet legitimate demand in an orderly and non-disruptive manner while minimizing arbitrage and hoarding. Finally, our reserve management strategy has shifted towards consolidation, building adequate buffers to withstand external shocks and reinforce the credibility of our commitment to exchange rate stability. So let me give you some data on the outcome of these actions in recent times. Inflation, which reached a peak of 54.1% in late 2022, has fallen consistently for 6 consecutive months. It now stands at 13.7% as of June 2025. This is the lowest level since December 2021, and we expect that even before the end of the year, inflation will decline to settle within target band, which is 8 plus and minus 2%. The cedi, as I mentioned, which was once under severe depreciation pressure, has appreciated by 42.6% year to date, compared to a 19.2% depreciation last year. This appreciation is not merely nominal, it reflects real strength and underpinned by improved confidence, increased supply of forex, and reduced speculation. Then we have our gross international reserves. This has risen from 8.9 billion at the beginning of the year to over 11 billion as of June 2025. Now we benchmark to the level of imports, and when you do so, it is equivalent to 4.8 months of imports cover. This level has not been seen since the COVID period. Now, this progress has been reinforced by macro fiscal coordination, particularly under the IMF-supported ECF program. The Ministry of Finance's commitment to fiscal consolidation has reduced the fiscal monetary policy conflict, allowing our policy tools to work more effectively. The staff-level agreement with the IMF, combined with improved credit ratings, has further boosted investor confidence and supported portfolio inflows. Now, one of the most underappreciated elements of monetary stability is the power of transparency and consistent communication. In a context of uncertainty, speculation thrives on silence. And this is why the Bank of Ghana has strengthened its forward guidance function. Through timely monetary policy committee press releases, inflation outlook reports, and stakeholder engagements, we provide clarity on our policy intentions. This not only aligns market expectations, but also reduces the risk of destabilizing reactions. Our experience confirms a basic truth, which is that policy effectiveness improves when the market believes the central bank will do what it says and says what it will do. So So on the cedi's rise, while monetary policy has provided the stabilizing anchor, it is the structural shifts beneath the surface that have created durable momentum for the cedi's performance. On external sector resilience, our external position has improved markedly in the first half of 2025. The trade surplus surged to over 5.6 billion for the first half of the year, up from just 759 million a year earlier. Remittance inflows have continued to grow steadily in spite of some hiccups in the last 3 months or so. And this has been supported by the adoption of mobile-enabled remittance platforms and sustained diaspora engagements. The provisional current account surplus also improved to 3.4 billion in 2025, as at the end of the half year, from a surplus of 283 million within the same period last year. Inflows from the World Bank, the IMF, and other multinationals have also helped improve Ghana's external financing position and reduced rollover risks. On the domestic front, the success story is one of painful but necessary reform. The Bank of Ghana's post-debt restructuring strategy focused on 3 critical priorities. First is digital finance oversight. Under this, we have streamlined our licensing frameworks for payment service providers, for enhanced cyber resilience protocols, and we have initiated pilots for the ECD. Ghana Central Bank's digital currency, which we call the ECD, that project was launched a couple of years ago. We are still piloting it, and hopefully within a year or two, some progress will be made in that regard. This is positioning the cedi for relevance in a digital-first financial ecosystem. The second plank is banking sector stabilization. And under this, the sector remains stable, with capital adequacy improving to 15.8% and liquidity buffers being rebuilt. While non-performing loans remain elevated, risk-based supervision is being enhanced to contain vulnerabilities. The third plank is forex market integrity. And under that also, the bank has stepped up surveillance to ensure that retail and institutional FX pricing remains aligned with official rates while curbing illicit parallel market activities. These efforts are occurring in the context of fiscal restraint, which has helped reduce inflation expectations and facilitated the real appreciation of the cedi. Now, despite these macro-level gains, the cedi's long-term strength depends not only on policy, it hinges on how widely and willingly it is used within our own borders. And as I mentioned, a disturbing trend persists, where a growing number of local businesses and service providers, particularly in real estate and other sectors, are demanding payments in US dollars or quoting prices in foreign currency. This is a breach of the law and a breach of trust in our national currency. We need to act together to decisively reverse this culture. I've also already mentioned the example of Kenya and South Africa to be our guide. Now, to strengthen enforcement, the bank continues to issue directives and circulars to regulated institutions, reiterating the primacy of the cedi in domestic commerce. We are collaborating with law enforcement, the Ghana Revenue Authority, and sector regulators to monitor and prosecute breaches. And thirdly, the regulatory sandbox initiatives and fintech licensing reforms will require that all local financial services remain cedi-denominated by default. Digital innovations such as the ECD are also pivotal. Once fully scaled, the ECD will ensure that even in cashless transactions, the Ghanaian cedi retains its primacy, not only within formal banking systems, but across rural economies, mobile platforms, and regional digital trade corridors. In parallel, the Bank of Ghana is finalizing a regulatory framework for virtual asset service providers, or what we call VASPs. And this is to bring oversight and transparency to digital asset activities. In other words, what many of you know as cryptos and others. This dual approach, introducing a sovereign digital currency while regulating crypto-based platforms, will secure the cedi's relevance in the evolving financial landscape and ensure that innovation supports rather than undermines monetary sovereignty. And so hopefully from the end of September, we are going to be able to regulate the exchanges that provide what you know as cryptocurrency. A friend of mine says cryptocurrency is like the air we breathe, right? It's like the air we breathe. It's everywhere. You know, you can decide to look the other way. You can decide to pretend it doesn't exist. But the reality is it is ongoing. Many people are using it. I'm not an advocate, but I'm someone who wants to ensure that for those who use those platforms, they use them responsibly, that they use them safely. And so we are introducing the legal framework. The draft law is now ready. We are going around sensitizing different groups. Hopefully by the end of September, the draft law will get to cabinet and eventually get passed. And when passed, we'll have our powers to be able to enforce, to be able to regulate the exchanges in particular. So the rising Ghanaian cedi is not merely a financial milestone, it is a strategic opportunity, an opportunity to reinforce our monetary independence, to rebuild trust in our institutions, and to craft a currency system that is not only stable but future-proof. Now, our long-term vision as a bank. At the Bank of Ghana, we remain firmly committed to a long-term agenda, an agenda that is anchored in price stability, inclusive growth, and financial innovation. We understand that low and predictable inflation is not just a macro target, it is the lifeblood of economic planning, investment confidence, and household welfare. We are equally focused on deepening access to finance, particularly through digital channels, so that the benefits of monetary stability are felt at every level of the economy, from micro-enterprises in Tamale to fintech startups in Accra. But perhaps more than ever, the times call for a renewed commitment to macroeconomic sovereignty. The global landscape is increasingly uncertain, shaped by rising geopolitical tensions, tightening financial conditions, technological disruption, and climate-related shocks. Ghana must therefore build a monetary regime that is resilient, self-reliant, and able to respond swiftly to both external and internal pressures. And that resilience begins with a strong, trusted, and dominant national currency. On policy and legal collaboration, achieving this vision requires more than technical interventions. It demands strategic collaboration, especially between central banking authorities, financial regulators, and academic institutions such as yours. And this is why I believe institutions like Upsa Law School have a unique and indispensable role to play. You are the thinkers, the critics, and the legal architects of our financial future. We need your input not only in understanding the evolution of monetary law, but also in reimagining its future in areas such as digital currencies, such as cross-border payments, such as sustainable finance, and such as legal frameworks for virtual asset regulation. Let us work together, colleagues, to develop a forward-looking ecosystem, an ecosystem where legal literacy meets monetary policy, and where the next generation of lawyers, economists, and policymakers are equipped to defend Ghana's financial sovereignty in an increasingly digital and integrated world. But beyond the legal and academic realms, I must also issue a call to action to all stakeholders, banks, businesses, fintechs, and professional associations, that upholding the legal tender status of the Ghanaian cedi is not a sole responsibility of the central bank. It is a collective obligation. We need businesses to price in cedis, to respect the currency in practice, and to help shift national sentiment from dependency to dignity. And we need financial institutions to continue investing in cedi-denominated digital platforms, lowering transaction costs, and making the local currency the default of choice, not merely by law, but by convenience and by trust. And most importantly, we need to empower the youth, who are not only the most digital savvy, but also the most globally connected. To them, I say, trust in your currency is trust in your future. The cedi is not a relic of the past. It is a tool for building a new economy. The Ghanaian cedi's resurgence is not an accident, as I said. It is the product of bold policy choices, collective discipline, and prudent stewardship. It is proof that with the right reforms, the right institutions, and the right mindset, we can reverse decline, we can restore stability, and we can reclaim confidence. This is not the end of the journey. It is only the beginning of a new chapter. A chapter in which the cedi is not merely stabilized, but respected, widely used, and digitally future-ready. So let me thank the Upsal Law School once again for its leadership in convening this important dialogue. Your commitment to bridging academia and policy is exactly the kind of thought leadership Ghana needs at this crucial moment in our economic narrative. Let me also thank the panelists, yourselves, students, and professionals gathered here. You represent the very constituency that must carry this message forward into lecture halls, in courtrooms, in boardrooms, and in markets. And I am confident in the path we are on, not because the journey is easy, but because the destination is clear. And that is a Ghana that manages its money well, a Ghana that governs its currency with integrity, and a Ghana that builds a future that is anchored in financial sovereignty and in inclusive prosperity. Let us continue the dialogue with open minds and shared purpose. Indeed, the cedi is rising. Let us rise with it. I thank you for your attention.
Please, let's put our hands together once again. You can resume your seats. That's very, very inspiring. You have been told, trust in the cedi. A trust in the cedi is a trust in your own future. It's as simple as that. So, let's do that. Let's put our hands together for him once again. Yeah. Yeah. So, we have the next item. You see, while the discussion was going on, I was thinking about one thing. There are a lot of law students over here, and I think this is kind of macro economic issues and all that. I told you to go and do economics. He said you come and read law. So this one is up to you. It's kind of everywhere. So I won't even try to, restate what the governor has said, because if I try, I'll begin to see legal principles instead of economic principles. So thank you. I'd like to do a quick acknowledgement, and then we'll break into the program, do a presentation to the governor, because I understand he has to go back and attend to very important things. You can't detain a man like this for too long. So, yeah, so let me acknowledge Mr. Robert Jatto, is CEO, Chartered Institute of Bankers Ghana. Where's he? Thank you. Mr. Emmanuel Dankwa, Head of Research and Consulting, Chartered Institute of Bankers Ghana. Very well. I have Mr. John Ewa, CEO, Ghana Association of Bankers. Thank you. Because if your regulator comes here and you don't come, you can be in trouble. So I have to. Now we have Dr. Alfred Brahima, Institute of Directors, Ghana. Thank you, sir. I have Fred Nyinaku, Chief Operating Officer, APSA. I have Cyril Nye, Head of Communications and Strategy, APSA. And I have Shika Akolache, an entrepreneur, and a member of the Vice President's team working so hard to roll out the women's banking. Thank you. Yeah. Thank you. Thank you. Yes, I have to acknowledge faculty members of the UPSA Law School, of which I'm part. Some of them are not here, but they will answer a query by all means for not coming for the event. I'll issue that as head of department, and I'll do it. But thank you. Now we are going to have a presentation to the governor. So I'd like to invite the Dean of the Law School and Head of the Planning Committee, Gertrude Amakwa, and who? Yes, yes, Madam Esefua. Please come join us today.
Thank you very much. I would like to bring the governor back to the podium. Thank you. So the UPSC Law School, as I indicated, is highly honored to have the governor here. Subject to correction, which I think will not be, you are the first governor to have visited the UPSC, but certainly the law school. So we are deeply honored, and as a testament to your national service, we present this small plaque to you, a joint initiative of APSA Bank and the UPSC Law School. And with your kind permission, I would like to read the statement. So UPSC Law School, APSA Bank, presented to Dr. Johnson Pandit Asiama, Governor, Bank of Ghana. For your exceptional leadership in monetary policy superintendence, leading to a historic rise in stability of the city as the effective legal tender of Ghana, coupled with your years of dedicated service to the central bank, the APSA Law School, the UPSC Law School, and APSA Bank Ghana hereby present you with this plaque in testament of your excellence. Signed, the Dean of the Law School, and Dr. Edward Nati Boche, MD, APSA Bank Ghana Limited, 17th day of July, 2025. Please acknowledge.
So please, we'd like to invite all our invited guests to take a group picture with me. And then, all right, yeah. So, all right, so please, I invited, you can all join. Please join. So, okay, again. All right. Thank you. So please, you can all join in. Shika. faculty. Yeah, Thomas. Yeah. Wait, this way. Please, let's put our hands together for them. Yes. Thank you, Governor of the Bank of Ghana, for coming. We'll now be transforming the stage to another thing, because we are going to have the roundtable or the panel discussion. And after which you'd have the opportunity to ask any questions you want to ask. Yes. All right. So, please, the governor is leaving, so if you want to corner him somewhere and say hello to you, do that. Right. Thank you.
industry. You have lots of leaders, top people in your midst today. I encourage you, ask all your questions. This is one rare privilege where you will have leaders, experts, right at your doorstep. So I encourage you, law students, today I'm on your side. So as we start, I will just take a few questions, but I want to leave a lot of room for Q&A to allow you to ask questions. And while we sat there, Yao told me that a lot of the discussions will be in plain language, so that it will be devoid of jargons and technical terms, just so that we can unpack what is behind the resurgence of the Ghana cedi. Thank you very much. Okay. Great. Okay. There's more good news, that the governor left someone to sit in his stead to answer the questions that are related to policy from the central bank. I think that deserves a bigger clap. Yes. Dr. Kwachi, you're welcome. So since we already have spent some time, I'll just go straight to asking a few questions, and then I'll leave the floor for Q&A. I will first direct our question. Our first question will go to Adolf Pega, Mr. Pega from Absa Bank. To find out from him, we'd like to know what are the main levers behind the recent appreciation of the Ghana cedi.
Since its rollout in January 2023, the Bank of Ghana has disclosed that it incurred losses of 317 million Ghana cedis in 2023 and some 1.82 billion Ghana cedis in 2024 under the Gold for Oil program. That brings the total losses to some 2.14 billion Ghana cedis in over 2 years. The central bank says that it injected 4.69 billion Ghana cedis into the program, effectively losing 45% of its working capital, or the capital actually deployed in effort to stabilize fuel.
Imagine a family without a home. Imagine a song without a voice. Imagine a church without prayers. Imagine a government without citizens. Imagine democracy without journalists. Imagine a world without the media. Life is full of issues and stories about people, communities, and governments. Stories that have to be told by well-trained journalists. That's why you can't imagine news without Joy News.
Because you spend less local currency to buy your product or your input. So for businesses that have cost denominated in USD, they have the benefit. On the other hand, we are living in a continental Africa to say, and we are driving what we call after the Africa Continental Free Trade Agreement. What it means is that Ghanaian businesses should be selling the African market. Last 2 weeks, I was in Nigeria. I bought a kaftan, and I converted it. It was just about 150 Ghana cedis. Do you buy kaftan here for 150 Ghana cedis? And you ask yourself, what's the reason? The reason is that your currency has strengthened. And so when you convert the Ghana cedi to the Naira, you get a lot of Naira. Your product or the product that you are selling outside Ghana are becoming more expensive. And in addition to the taxes that we have, if the product that you are selling outside Ghana are more expensive, then you cannot compete with the Nigerian business that you are trading with. You cannot compete against the Ivorian businesses. So that's a challenge for us. The other thing is also on the side of costs that are not dollar denominated. So last time I said on another event, that no employee has gone to an employer and said that the local currency has appreciated, so reduce my salary. There are costs that are denominated in local currency that will stay fixed. So whilst businesses that are taking the hit on their top line because they are exporting, they also have costs that are fixed at local currency, and that is not going down. Same for utilities. Rents that are denominated or pegged against the dollar, same, will not go down. And so locally produced products will also not go down. So that's the challenge you have. I guess for the central bank and for the government, what we should be targeting is stability and not rapid appreciation or rapid depreciation. It actually does not help in planning. For most business, they want stability. And you want stability that will help you plan that in the short to medium term, I can plan with an exchange rate of 12.5% or 12.5 Ghana cedis against the dollar. And that's what businesses want. Because in the last 3 months, you've got a client that you've built. For instance, the person is supposed to pay you $10,000 outside Ghana, say. The person's amount that he was supposed to pay was 15,000 Ghana cedis, to say, or 150,000 Ghana cedis. Today, the person is paying me the same amount, but I'm getting 102,000 Ghana cedis. So I've lost about 50,000 Ghana cedis on the same transaction in the last 3 months. So imagine I'm dealing in millions of dollars with external clients or external businesses. I'm going to take this hit. And that's the practical sense of it. That it's not all good for all businesses. So stability is what's important, not an appreciation, but the stability of the currency.
Thank you very much. Thank you again. Thank you, Mr. Abialati. I want to find out, with the question of stability, what tools the central bank implementing to achieve stability? Because we are learning that it's not just about strengthening the city or the city becoming stronger, its appreciation, but the question is really its stability. So what tools are the central bank putting in place so that we will achieve that stability that is required?
Thank you so much. Well, I wish I had been here to hear the governor's speech. Unfortunately, I couldn't come early enough. But I know the contents of his speech as an advisor to the governor. First, I must say that we all know that the city has depreciated for a long period of time, and the depreciation accelerated in recent years. So what we are seeing now, I can say, is some kind of correction, because the sharp depreciation, apart from the fundamental economic factors, was also driven by somehow, some part of it by speculation. So what has happened over the last year is that there has been some correction, and you will see that we have come down from about 15 to 10 point something. But you will see that it has sort of settled there. And the president himself has given a signal that he thinks the true value of the CD is between 10 and 12. So that signal that the president has given is also guiding Bank of Ghana's policy. In terms of what has caused the stability and the appreciation, just let me reinforce some of the things that I'm sure the governor must have already have alluded to. And maybe to break it down, because I don't know whether the governor's language was highly technical. Look, we have something that we call tight monetary policy. You know where the policy rate has been, 28%. That is pretty tight. And when you have that, it means that you are not injecting a lot of liquidity into the economy, which will be chasing foreign exchange. So that's one. The government also, in terms of fiscal policy, you are seeing that government has been much more prudent and holding back its expenditure. I hope that at the same time they are not accumulating arrears. That's my expectation. But it is prudent. And then you have a situation where monetary policy and fiscal policy are now better coordinated. There's more consultation between the central bank and then the fiscal authorities now than in the past. And maybe you are aware that under the IMF program, Bank of Ghana does not lend any more to government, under the program. In the past, Bank of Ghana used to lend a lot to government, and especially in 2022, the bank advanced a lot of credit to government. That also fueled the inflation and the exchange rate depreciation. And then, of course, you must have heard that this year, we have our receipts from gold, cocoa, and remittances have increased a lot. And then the gold purchase program, which is being supported by the gold board, is also allowing Bank of Ghana to accumulate a lot of reserves. In fact, I'm sure the governor must have mentioned that our reserve level has increased to about $11.1 billion, dollars as of now. And in terms of import cover, 4.8 months of import cover. This is a level that we have not attained for a very long time. In economics, we'll say that if we get to, say, 6 months of import cover, that will be a very high level. And this is the policy or the goal of the Bank of Ghana, to get to that level. So currently, the exchange rate, the CD, is supported by a strong, reserve level by the Bank of Ghana. And given that monetary policy will continue to be tight, fiscal policy prudent, but of course, this is talking about the short to medium term. This economy faces very, fundamental weaknesses, underlying structural weaknesses, and those who have to be addressed. I'm talking about the fact that we depend so much on a few primary commodities, and then also on the import side, we import virtually everything. So there will be the need for structural transformation of the economy over the long period, to be able to sustain the stability in the long term. So while Bank of Ghana is managing monetary policy, government is also doing its bit. I'm saying that we should see some kind of transformation in the economy going forward, and that will help us sustain the stability for a longer period of time. Thank you.
Monetary policy, and we have structural reforms. I want Mr. Kenyan to help us.
Well,
he is a leading banker. I want him to just give us, as law students, right, we want to just get a clear understanding of when you say fiscal policy, monetary policy, what are they talking about?
But was I too technical?
No, not at all.
Okay.
Not at all.
Sure. So fiscal policy simply refers to the decisions or actions of government relating to spending and taxation, right? So when you hear they talk about fiscal policies, it's just in reference to these measures. What is government's decisions and actions around its spending? What is government's decisions and actions around its tax policy? So as government increases or reduces tax, there is a certain effect on the economy. As government spends more or holds on or reduces spending, there is a certain effect on the economy. The net of it is what is aggregated into what we often hear to say fiscal deficit and all that. So if essentially that's what fiscal policy or fiscal measures means. Then monetary also refers to the actions and decisions the central bank takes in relation to price stability, and price stability generally, whether exchange rate, whether inflation, those are price stability measures. And the tools they use are altogether what they term as the monetary policy measures. Some of those tools they use are, you may have heard bankers talk about cash reserve ratio. You may have heard, he mentioned, the governor himself mentioned the Bank of Ghana bills, what may be technically referred to as OMO or open market operations. And so things like that are tools that they use. Specifically in respect of the FS, Bank of Ghana uses a forward auction approach to allocating FS in the market. And there is nuance to it. It's not just the fact that we say they sell FS and they sell it like anybody else. What they do is that they take orders backed by demand, effective demand. So your bank, you take an order to your banker, and your banker will take you to the auction. And effective demand means you've given your banker cash, and so they take the cash to the Bank of Ghana. You bid at a certain rate. If they allocate to you, then that is the rate at which, when the maturity period of the forward is due, they will sell to you. So those are some of the things they do under monetary policy, simply. So in short, the decisions and actions the central bank takes around these inflation, interest rate, and exchange rate measures are all classified as monetary policy.
Thank you very much. I'm wondering, how do the two go together, i.e. fiscal policy, monetary policy? How are the two combined to ensure that we have a stable exchange rate regime? And maybe I'll chip in the third point, structural reforms. How do these three play together so that we can have a stable exchange rate regime?
So good question. And I'll take it from a typical what is happening now. The governor again said they put the policy rate at 28%. Why were they doing that? They were trying to incentivize us to place money in the system and not to use the money. Because as you use the money, then inflation begins to happen because everybody is spending their money. As you know, the simple definition of inflation, as we say on the street, much money chasing fewer goods, right? And so if they want to reduce the inflationary pressure, then we must have an incentive not to spend our money. And so they do that through their interest rate measures. And so that is one. It means that the central bank is mopping money out of the system. Think of the reverse. Imagine a situation where the central bank is using that kind of approach to mop money out of the system. Then the finance minister, on the other hand, is spending more money because they are trying to keep campaign promises or something. Then it comes to cost 90, as we say it in ordinary parlance. For that reason, it needs to be coordinated and aligned. And maybe that is one of the benefits we are seeing now. Generally, we perform better in terms of the alignment when we are under a fund program. So you will see that whilst the central bank is doing everything to mop the liquidity in the system, the liquidity is simply the money in the system, the Minister of Finance is also not spending as much. So there is alignment. The net effect is that inflation will drop. So when you hear inflation has dropped, as the governor said again, it is not a surprise because that's the consequence of the coordinated action.
How likely are we to see these two going in alignment with one another for us to achieve the stability that we are desiring?
Yeah, so you hope that, the two authorities, the monetary authorities, the fiscal authorities, will work closely together, and that's what they should do. In fact, the central bank, the Bank of Ghana Act, enjoins the bank to support government's, policy overall. So that's why monetary policy should try and align with fiscal policy. But in practice, you will see that the objectives or the goals of monetary policy and the fiscal policy tend to diverge. Normally, the government or the fiscal authorities want to see more growth in the economy, while the central bank wants to create a stability. So you see that the central bank will normally increase its policy rate to tighten monetary policy. But that will have a dampening effect on economic growth, which governments don't normally like. In fact, in the US, that tension is currently going on between the president and the chairman of the Federal Reserve Bank, who is also our governor. They have interest rates like our policy rate, which is just below even 5%. But President Trump is insisting that they should reduce the policy rate so that they bring other interest rates down to influence growth. But meanwhile, they are also concerned about the possible inflationary effect of that. So monetary policy and fiscal policy always tend to conflict. So it is ideal when you get to a position where you say that both of them are aligned. But as much as possible, what is going on now is that they are trying as much as possible to coordinate those two types of policies. And one factor that is working for the central bank is that under the IMF program, the bank is not supposed to lend to government. It is a requirement. So that takes pressure off the monetary authorities. Yeah, so in that sense, well, I expect that they will continue, but what I'm not so sure is when the program is over. You see, because Ghana, we have a history whereby when we are under an IMF program, when they provide what we call an external anchor to macroeconomic situation. Then when we leave the program, then we go back to our old bad ways and overspend and all that, especially during the election cycles. And that's when we destabilize the economy. And then we have to run back to the IMF to impose, the discipline on us. So in our history, we've been to the IMF 18 times, maybe more than any other country. But I hope that this will be probably the last of our programs, and we never again are we going to go to. But it requires us to impose the discipline on ourselves and not require, the IMF has said, the schoolmaster to come and do that for us.
I think that we are law students. Will we back the approach, an approach where laws are used to effect this kind of change that we are looking for? We are looking at discipline. Will we support, Mr. Afialati, will you support a regime that, a legal regime to keep our actors in check?
Well, thank you very much. Wearing my second hat as a lawyer, I'll support that. But the problem or the challenge we've had, and practically, I'll give a very good example. We passed the Fiscal Responsibility Act that capped our deficit 5%. We suspended that act when we were struck with COVID. And today, we are still over 5%. Maybe over the last few years, we've been over 5% until recently. And so when we suspended that act, the question you ask yourself is, do you pass law just to break the laws? It is consistent policy across board that can help you achieve some of these targets. And I'll give you some very good examples. On the tax or fiscal side, we have instances where there's a new government that comes, removes or abolishes all the tax handles or almost all tax handles, and over time they introduce new ones. That is policy inconsistency, and it affects planning for businesses. And so we have to ensure there is policy coherence and consistency across board and over time. Otherwise, after every 4 years, we kind of remove all tax handles, and then over time we introduce new taxes. In taxation, you are either enforcing existing laws, amending new laws to make them more efficient, and then introducing new laws. Every budget that's presented to Parliament over the last 5 years or so introduced new taxes. That does not enhance policy consistency. The second point I would like to make is that we have to ensure institutions are working. We have to empower the relevant institutions to enforce the laws. And by doing that, we restore confidence and trust in the local currency. Examples have been given where you go to some countries, go to Kenya, go to Ethiopia, you put dollar on the table and the person sees it almost like a fake currency. Because the guy doesn't see any value in the dollar. Give dollar to someone in this room. And you see how the person gets excited. Yes, because he knows that there's an abochi behind this auditorium who is ready to take it. Elsewhere, you can't have that. And so we have to, over time, restore confidence in our local currency as a store of value and also as a currency for all transactions. We have allowed instances where even education, openly, educational institutions are charging US-denominated fees in the country. We shouldn't allow that to happen. Landlords are charging for rent in USD-denominated. We shouldn't allow that to happen. We have to restore confidence in the local currency. And the last one, maybe just to add to it, is the fact that we have to give opportunity for people to invest in our businesses. And one good example is to enhance our local capital markets, for instance. In the last few years, there hasn't been a lot of activity on the Ghana Stock Exchange. How many IPOs have you heard happen? The reason is that we had some macroeconomic challenges, and so that affected the listing on the stock exchange. I heard the Ghana Stock Exchange CEO mentioning that they are far advanced in a program to establish a West Africa exchange, where if an MTN or any institution in Ghana lists on a West Africa exchange, you will have some of the business, even Dangote, invest in a Ghanaian business. Because the challenge we have is that a lot of business in Ghana here or companies do not have the appetite to invest on the Ghana Stock Exchange. But there are others in other countries that are willing to invest. Someone in Senegal will be interested in investing in Alouex, will be interested in investing in Blue Skies. Blue Sky can expand and even be bigger than what we are seeing now. So if we enhance our capital markets, we will have opportunity where business are doing well. And we wouldn't have to rely on foreign currency and be debating. A lot of the activities, as Dr. Kwachi has alluded to, is through the activities of speculators. We should address this speculation because we do not have confidence in our local currencies. The speculators are also benefiting. Tomorrow, if you tell someone the exchange rate is coming to 15, you see how people rush to the banks to go and buy dollars. That speculation is something we should address.
Let me just reinforce some of the things he's already said about the need for legislation and all that. As he has said, we have rules already in place. Fiscal rules, that's the 5% deficit ceiling, which was suspended. The minister suspended it in 2020 because there was an escape clause in it, which he could invoke, is that right? Invoke. Yeah, so because of external shocks to the economy. But since then, it is not being restored. But this is the responsibility of Parliament to do that. They've abandoned that responsibility. I don't know whether there are any parliamentarians here, but this is... and then you go to the Bank of Ghana side also. They have a limit on lending to government. It is 5% of last year's revenue. Well, that has been put aside now. And, well, it is actually being reduced to 0 under the IMF program. But the Bank of Ghana Act is being reviewed. And I think they will reinstate the 5% lending to government. Because as a developing country, you need that kind of room for the central bank to provide emergency lending to government. So they will restore that. Then, as he said, the foreign exchange market also, there are several rules that, if I am coming from Bank of Ghana, but I have been calling for an enforcement, Bank of Ghana to enforce those rules. For instance, when you are traveling, you cannot carry more than $10,000 on your person. Now, but we go to the airport, even the customs people, they don't search us, that we take it on us and go away. Even in the US, where the dollar is their currency, when you are coming out of the US, you cannot carry more than $10,000 on you. If you are carrying more than $10,000, you have to declare it to customs. If you don't do that and you take the risk and they find it on you, they will seize it. And then Bank of Ghana, the Foreign Exchange Act says we should not be pricing any goods or services in foreign exchange in the country. But that is, done on a very large scale. You cannot pay Ghanaians for their services in foreign currency. But we have consultants and special aids and so on, receiving foreign exchange for their services. So the rules, we have the rules and the regulations, but we need to enforce them.
You're right, enforcement is key. We are at the outside UPSA Law School quarterly banking roundtable, and this will not be complete when we have not heard from the law students themselves. So we want to hear from you. If you have any questions, yes, I think Mr. Kwega has.
Yes. I'll play the devil's advocate for the public here. So the fundamental question is that why are people unwilling to price in CD and rather they will do dollar? And why are people rather preferring dollar than the CD? Currency has multiple purposes beyond medium of exchange. Yes, the CD can serve as a medium of exchange, but is it serving as a store of value? And that's the fundamental question. We do not see, as they say, one swallow does not make a summer. People, we are rational. So they see, we've had Q1, Q2, things are looking good. Is it stable? Is it going to be stable? If we are able to hold the stability over time, it will affect behavior. Because we saw in Q2 that suddenly there were reports that real estate companies were pricing in CD. Why? Because they were losing in dollar terms, the rates were dropping. So they were suddenly pricing in CD. It tells you that the issue is not necessarily the currency. It is the ability to hold value. So if the currency is not holding value, then definitely people being rational will continue to find ways to maximize their economic benefit. For that reason, the stability question then falls squarely on the Bank of Ghana to ensure that the currency is stable. I think the governor has tried to make us appreciate the fact that we are not running a fixed exchange rate regime. And so for that matter, it is to be expected that the currency will fluctuate up and down. But truth be told, until this year, our currency movement direction has always been depreciation, right? And so that then feeds into people's mind, the subconscious, and therefore decision-making. So if we are now in a period where the central bank is fully focused on stability, fully focused on defending the currency, it gives some assurance, and therefore people can be encouraged and will, in my mind, over time begin to be inclined more to holding CD than any other currency. Thank you.
Do we have any questions? Yes. Yes. Please come forward.
Sorry. Then you should have this.
No, I think the questions will be directed to our panelists. So, okay, so I will keep this and then I'll, okay. All right. Yes. Yes.
You mentioned that the city has been strengthened over time, and that led to more imports, so that has led to people importing more because now the city can buy more, if I'm stating it right. Now, that, if I'm right, that leads to, if there's more spending than earning, it leads to a trade deficit if I'm right. And now that has an effect on the balance of payments. Now, if that happens, and then now the city, you have to buy, that's very property. But we are exchanging more for, we have to buy in their currency. Doesn't that see that back to square one?
Okay, so I like the conundrum that you've painted. And I know a lot of people have that. Okay. That's your first.
Okay. Okay, so how many questions do you have? Just two. Okay, we'll take the two. Yes, please go ahead.
The second one is that as a law student who's not have much exposure to economics, this is a new experience. And a lot of the things are a bit confusing. How would you suggest that a law student who's interested in knowing about economics becomes abreast with current affairs and just economics and so any resources, any books, anything to help?
I think this is a great question because it's going to the lawyer on the panel.
Well, interesting. So I'll start from an easier question that you asked. So as a law student, you should not only be thinking about law as in what you are reading, your constitutional law, your law of contracts. All of what you are reading today will translate into commercial transactions in future. That's why you learn commercial law, company law, and all. And if you're a lawyer and you want to specialize in commercial transaction, project finance, which is what I do, you have to understand some of the terms that we are using here. So you don't sit in a law class and say, I don't understand macroeconomic factors, what's inflation, what's exchange rate. You draft a contract or you go for an arbitration where the parties have entered into an agreement and they've linked their agreement or index to the dollar over a certain period, or they are using US Treasury rate. Do you know what the US Treasury rate is? And yet it's in an agreement. You need to understand what it means. So you should be following Bloomberg, you should be reading the stories there, you should be listening to CNN, their business news, and understand. They speak in language that you can easily understand. So follow through. Listen to business news. Don't tune in and only listen to the political debate. You're not only doing constitutional law. I mean, you're doing this here, so, but he's also very good with contracts. He also knows company law. And these are business transactions. All of what you are discussing here, you translate and you advise your clients based on that. So you have to understand and be on top of them, which is why I'm happy the law school is anchoring this, because you have to understand it. A lot of people run away from legal accounting, I know. But when you go to law school, you do legal accounting, and you can't run away from it. If you don't pass it, you cannot be called to the bar. To answer your first question is the conundrum that you mentioned. I didn't say that the appreciation of the currency has led to more importation and with figures. No, it is likely to, and it makes the currency stronger. So imports will be cheaper for Ghanaians who are importing. But the good thing is, on the other hand, we've had the benefit of commodity prices increasing, Gold, for instance, has increased by approximately 40% from about $2,300 per ounce to now $3,200 per ounce. That means that our gold export is going to be more. We have increased the export in terms of quantity, so it is price and quantity. So price has gone up, and the quantity of export has also increased. So as a country, we've benefited. This has resulted in the benefit that we mentioned, that our reserves has increased. So we have 4.7% or 4.7 months of import cover. We have about 11 billion, as the governor said before. Same with other variables such as our current account. So our current account used to be under or just about 66 million. It's now about 2.7 billion. So all the variables that have been mentioned before are going in our favor, backed by strong fiscal reforms with IMF support program. When you're under the IMF support program, your currency seems to be working so well. I've seen countries going the same trend. Zambia, when they signed onto the IMF program, their currency and other variables started doing well. I think, like I said before, it's about consistency and stability over a period, not over a short period, but over a long period of time.
Thank you. So don't just study your law books, but also listen to the news. Tune in. Just try to familiarize yourself with what's going on. And over time, the terms will become more familiar with you. Thank you very much. I think Mr. Kega wants to say something.
Thank you. On the first one, I think that is the credibility to a managed floating exchange rate regime. I mean, the scenario he painted, because there are periods that you would have a surplus on your trade balance. There are periods that you have a deficit. And his argument is, as your currency strengthens, it then, because it now makes things in other countries cheaper, people are more likely to buy more from outside, which by itself means you are using more dollars, you are giving more of the dollar to people outside, then over time, it reverses the situation. And so what a managed float situation does, as the governor explains, is they observe, they study it, they use a lot of data. So then they are able to pick the points at which there needs to be a correction or intervention, so they step in. So you realize that even when the currency was significantly appreciating, it was getting close to 9, but over time, it has come back a bit between 10.4, 10.5, 10.3, depending on where you are going. So that's how it works. There are self-correction measures. At the same time, also, there is a manager to it, which is the central bank, and they step in to correct, at least they try to correct to avert the kind of scenario you paint. And in terms of how do you get to know being a law student, naturally it's not everything that all of us, the courses we did in school, will teach you or will prepare you. You should know in the bank today, people studied all sorts of things, but they work in the bank. Once you enter, you must educate yourself. As you are exposed to the meetings, you listen. And even before, these days you listen to radio, you are in this forum. You are privileged that you are reading law, but you are being exposed to this level of financial and economic conversations. Other people may be reading law, they may never have this exposure. But what do you do with it? As you take notes, the keywords that are confusing, there may not be opportunity to ask follow-up. Note them, Google them. Yeah, that is it. You Google them, you read. And if you are interested, it will lead you to another link. Read it. And that's how gradually, anytime you hear somebody discussing something financial, economic, and you hear a word you don't know, you don't understand, Google it. It's not, over time, you realize that you certainly know a lot more than others. Thank you.
Thank you very much. What you see is that the power is in your hands. Thank you very much. I think that I've been signaled that we have run out of time. So I'll take our closing remarks from our panelists. We heard from the governor that we should trust the city. What are your closing comments on what steps we can take to trust in the city, to restore confidence in the city? I'll start with Dr. Kwache, and then I'll take Ms. Abialati and take the final comments from Mr. Kega.
Yeah, so the governor said we should trust the city. In other words, Ghanaians. We should trust. Of course, your currency should be of value. I'm sure that's the message is conveying. Should be of value, to you. But trust in a currency doesn't come just, by itself. People will not trust the currency if it's not, especially if it's not stable. If it's not stable, then people will not. That's why countries, including Ghana, we experience some levels of dollarization. In other words, we prefer the dollar instead of the cedi. Why is that? But of late, since the cedi strengthened, you will see that people are the confidence in the cedi is increasing, and now people are some people opt for the cedi instead of the dollar. In fact, the governor, I don't know, he gave us an example whereby he said his friend, was going to buy a car, and he had dollars because he knew the car was being priced in dollars, so $40,000. Then he took it there, and the dealer said, no, they won't accept dollars. You should rather go and bring cedis. And then he went to the forex bureaus and the banks, trying to get the cedi equivalent. And they said, well, we can change it for you, not at one spot, various places. But then we can only give you so much. And some were prepared to pay just 9 cedis to $1 and all that. So you see that the cedi is gaining strength, and the confidence in the cedi is picking up. And it is that stability that we, the policymakers, need to maintain so that the people will have more confidence in their currency. I don't think that we should put that burden on people. Of course, he also mentioned that we are celebrating the 60th anniversary of the cedi since it was introduced, yes, exactly. So to whip up this enthusiasm and confidence in the cedi. And then also, I'm sure he will say, try and handle the cedi, very well. But, when inflation is so high, the rate at which the currency circulates is so high that it gets depleted, dilapidated. And therefore, the cost of even printing to replace the old currency to the Bank of Ghana is so high. Now you see that the 1 cedi note has disappeared. The 2 cedi note has disappeared. And now the pressure is on the 5 cedi note. You go to America where they issued their currency over 200 years ago, and the $1 note is still in circulation. Even coins are still in circulation. And it is because they have been able to achieve price stability, exchange rate stability for a long period of time.
Thank you very much.
Yes, so I'll make 2 points. The first one is that we should continue or advance our digitalization agenda, particularly in relation to our currency. We've mentioned the ECD. We should operationalize that. So we know it is going through the piloting phase, but we should get to a point where we are operationalizing that. Because the average person would like to use the 1 cedi or the coins and all. But if I'm buying something with my credit card and it is 99 Ghana cedis, I will still pay because it will still hit my account as 99. But if I go to the counter and it's 99 Ghana cedis, how do you pay? You get it. So it's easier when you introduce the ECD and you use the digital platform to enable people to do transactions. However small the transaction is, they will still use it. So let's support the Gen Zs. The Gen Zs want to use platforms, using their phones to do transactions. And so let's support that. The second one is there are ways that we can have Ghanaians benefit from local currency linked to international currencies. So a very good example is when we had the cocoa bill. People invested in the cocoa bill. If cocoa prices are going up, people can benefit from it. Can we introduce other commodities like gold bill? Today, gold that used to be 2,300 per ounce is now 3,200 per ounce. So if you introduce a gold bill, people will still invest in it. They will get a benefit in local currency, but as the currency or the price of these commodities are increasing, Ghanaians are benefiting. But it should be structured and well-regulated, because the challenge we had with the cocoa bill is at some point, people disinvested and there were all manner of issues with it.
But if we regulate it well, just like cryptocurrency, we should have proper regulation for cryptocurrency. We should also have or introduce commodity bills in the country so that Ghanaians will sit here, benefit from increased gold prices. Tomorrow, if gold price is $5,000 per ounce, I'll benefit. But the benefit that I'm getting is denominated in Ghana cedis. I'll get a benefit in Ghana cedis, but I'm benefiting from a commodity that Ghana is selling. And I think it's something that we should regulate properly and introduce or operationalize. Thank you. Thank you. And I like it when he was emphasizing the need to use some of these digital channels and infrastructure. Just that he was emphasizing that it's the youth and the Gen Z. No, now it's everyone, right? And this is where I will tell you that if you are not sure what to do, if you are not sure you are capable, all this technology, it exists with APSA today. So check with us and we'll show you how you can benefit. We can give you a card that will be linked, integrated. If it's Momo you are using, we can integrate it to various payment channels for you. As recently as last month, APSA introduced a service we call MobiTap, the first of its kind in the market, where you know POS, most of you know the machine POS, right? It's a very expensive machine. So when you go to other countries, it's everywhere, and that's what they use. They don't use a lot of cash. But here, because of the nature of the business people do, all these SMEs, the small corner shops and all, how are they going to afford the POS? But everybody has phone these days. So APSA has a technology that converts your smartphone into a POS. So if your mom has a corner shop, please talk to the APSA people. They will sort it out and make. And the thing is, it doesn't just take card. It can take Momo, any payment channel. So Ghana has the technology already. And the truth is, it's not just APSA that has it. But as for the MobiTap, it's only APSA. Yeah, that one. So approach APSA. Back to the substantive matters. I will talk from an individual, what should we as individuals be doing? The governor has made a call to action. Now we don't have an excuse. The cedi is relatively stable. Let's make it the choice currency in our transaction. If it begins to depreciate significantly again, then we can do the rational thing. But for now, we do not have an excuse. He has done the fundamental work and he's calling us to action. Let's respond to that. What should the institutions do, like the banking sector and all? Ours will be to operate within the rules and enforce the laws. The central bank, part of the measures it uses to achieve its objective is through what we call policy measures, policy actions. And it is mostly carried through by the banks. And if we are not implementing them the way the central bank intends, then certainly we will not achieve the policy effect. So for us as institutions, that's why you go to some banks and you want to buy dollar, they say, give me the evidence that you are traveling. Those are some of the evidence that banks are trying to enforce. Otherwise, because you don't need the dollar, why are you buying it? Because you assume that next year the currency will depreciate. No. We don't want that kind of behavior. There are rumors. Sometimes our clients come to us and we refuse to do certain transactions. Then the next time they have left because they found another person who has done it. And that is not a right behavior in the community to achieve the objective we want. Then the last one is really on the state itself, which comes to how we prepare for shocks. You know, we are almost excited around this time. We say the currency is appreciating, but fundamentally, this appreciation is driven by commodity price hike, right? We are benefiting from how well gold is doing. Have we asked ourselves, what about the opposite? If gold is not doing well, how will we be faring now? And so we should start managing our buffers, and I'm happy the central bank is focused on growing the reserves. It's one way of preparing buffers for the rainy days. But from the fiscal authorities too, they have to begin to look at the buffers. There was the issue of the petroleum funds, the heritage fund, the stabilization funds that I think during the COVID year we went too much into. If you have a fund for rainy day and you step into it anytime it is drizzling, The day there is a storm, you may not be ready for it. And so that would be my suggestion, that let's begin to go back to those issues and make sure we are preparing the country for when the shocks come, because definitely those shocks will come because of our reliance on commodities, either from the import side or from the export side. Thank you.
I'd like to sincerely thank our panelists, Mr. Adolf Fega of Asiama, Dr. Patrick of the Central Bank, and lawyer Afialate from Keynote. And if there's anything I took note of, is policy coherence, policy consistency, and structural reforms. The rest is yours. Thank you very much. I'll hand over to you.